puppy trades? I wanted to do a general stock market update. We'll talk about the stock market. We'll talk about the crypto market. We'll talk about some short-term areas to look out for. We'll talk about some long-term opportunities. Okay, so let's get right into it. In my past two videos, I've said that XLY and XLV were going to be the two primary ETFs of sectors within the S&P 500 that we were going to be using to gauge where the stock market was heading and to be using our invalidation levels, okay? So this is the untouched XLY chart from my last video. It's really untouched from my last two videos. But I have not touched this XLY chart at all from my last video. And this is exactly what we expected. We had a wave 1 and a wave 2 correction. Then wave 3 went to the 161.8% extension of wave 1. Then we had an ABC correction to put in a wave 4 low. From that wave 4 low, we began wave 5. This was a wave 1 of wave 5 impulse. So we were looking for a wave 2 correction to buy and ride this wave 3 higher. So we got that wave 2 correction. So right now, very tight, very short term, if 161.35 holds as the low, XLY is doing exactly what we thought it would. And this looks very good for the stock market. Okay, if you're not familiar with this sector, Home Depot, McDonald's, Amazon, and Tesla are huge components of this sector. So if this sector is doing really well, I don't think we need to be too worried about the stock market. We'll talk about healthcare as well. Okay, but this is wave 1 and this is wave 2. And if we take the 161.8% extension of wave 1, that gives us a wave 3 target of 183. If we take the length of wave 1 and we place it at the wave 2 low, that gives us a target that is very close to 183. So right now, if 161 holds as the low, XLY, all these consumer discretionary stocks are heading a lot higher. And they're going to head higher, pretty impulsively. Wave 3 is a pretty strong wave in Elliott wave theory. So we're looking for 161 in the very short term to hold as the low. And we should be seeing XLY in the 180s by the end of April. Okay, so if XLY is going a lot higher and is doing exactly what we projected it would, then let's look at XLV healthcare and see if we have another ETF that we're pretty honed in on. Okay, so this is XLV healthcare. We talked about this chart in my last 3 videos. Wave 1, ABC, puts in a wave 2 correction. From there, the 161.8% extension of wave 1 is exactly where wave 3 is supposed to end. It's exactly where wave 3 did end. Okay, so XLV healthcare hit 118. It had an ABC correction and it put in a wave 4 low. So this is a textbook wave count right now. Okay, if this hits 124 in the next 2 months, I'm putting this in a book. Okay, because right now we take the length of wave 1, we place it at this low of, what's this low? 109. Okay, if 109 holds, then this count will be valid. In the short term, if someone was looking for a setup, which obviously this isn't investment advice, but if someone was looking for a setup, I think 113 would be a pretty tight stop loss. 109 would be the invalidation, and XLV healthcare is going to 124. Now, if we take the time length of wave 1, it's about 2.5 months. So in the next 2 months, because we've already started this wave 5, in the next 2 months, conservatively, I think XLV is going to reach 124. So they are the 2 ETFs that we are primarily looking for in kind of the short term. Now, some of the astute wave theorists will say, well, puppy trades, that's wave 5, right? Everyone knows what happens after wave 5, right? The world ends. Not necessarily, but I think I finally have an answer for you guys. What is the real place that the stock market bulls should begin opening a cash position to buy a very important dip? And I think I do have the answer for that. First, I think XLV will safely go to 124. Secondly, I think XLY is safely going to go to 183. But third, let's look at the emerging markets chart. And if we're kind of looking for a larger degree pullback, a larger degree place for bulls not only to hold out for, but begin holding a cash position for, I think EEM, the emerging markets ETF, this looks pretty similar to the small caps. There's not a ton of overlap with large cap, stocks. But if this sector is doing very well, the stock market is going to be doing very well. This is EEM, the emerging markets. This is one of the reasons that a lot of people are very bullish on the stock market right now in longer term time frames, because this is a massive, massive base that has been consolidating for over 10 years. So from 2007 to 2020, EEM was flat, completely flat. And what we're gonna, classical traders will say this was forming a base. Elliott wave theorists will say this is forming a nest. So if you are a conservative Elliott wave theorist, if you're a conservative Elliott wave theorist, you're going to say that this orange line right here for EEM, this is either going to be a wave A or a wave 1. And if we place it at this wave too low, this ABC correction, putting in a wave too low, you are either going to say this is a wave too low or this is wave B. So that's very important, because whether this is a wave B or a wave 2, if you take the length of wave 1 and you place it at the wave 2/wave B low, the conservative target is 62. So 62 right now for EEM is where the Elliott wave theorists will say that this sector is incomplete to the upside until it reaches 62. Now, from this wave too low, we have what looks to be pretty clearly a 1, 2, 3, 4, 5 waves impulse that completes a larger degree wave 1. From this wave 1 high, we have an A, B, C correction to put in a wave too low. So what do? We take the length of wave 1, we place it at the wave too low, and voila, the equal legs target for that wave 3 conservatively is 59.76. So I believe right now 59.76 to 62 is forming a box right now. The Elliott wave bulls are going to say the stock market will safely be going higher until EEM reaches this box. Now, what we're also going to look at is, does the world end when EEM reaches this box? No, the world does not end when EEM reaches this box. We have a lot of evidence why, but here's a big reason. This is a wave 1. This is an ABC correction wave 2. Then we have another wave 1 and another ABC correction wave 2 low. We have closed over both of these wave 1 highs. So what's that called? That's called a nest, right? So once we reach this wave 3 high, what it might look like, what it should look like, is that this isn't a wave A, this isn't a wave B, and this isn't a wave C. This is a wave 1, this is a wave 2, and this is a wave 3. This is a wave 1, this is a wave 2, and this is a wave 3. This is the wave 1, this is an ABC correction wave 2, and now this is going to be a wave 3. So what's happening? The emerging markets is forming a massive 12-year nest. So the reason that bulls need to be aware of when it reaches this equal legs target of 60 is because we are going to have an insane buying opportunity. What we're kind of looking for right now in the stock market is that once we reach 60 for EEM, the bulls are going to want to have a cash position so that they can go in heavy right here on this wave 2 correction, which is likely going to retest this wave B high of around 46. And then we're in wave 3 of wave 3 of wave 3. The stock market is exploding. Okay? But for the short term, I think bulls, we're looking for 124 on XLV. We're looking for 183 on XLY. And we're looking for the emerging markets to reach this this box right here of 60, because 60 is actually a very conservative target. Okay, so we're not going to look to short the stock market here. If this is a wave A and this is a wave B, the conservative target takes EEM to 62. But if this is a wave 1 and this is a wave 2, we can certainly find ourselves going past 60. Okay, so the idea is not to open up a short position at 60, it's to have cash ready to buy this generational dip. Okay, so we have wave 1, ABC, wave 2. Wave 1, ABC, wave 2. If we have a cash position ready when this box of 60 is reached, this could be a generational buying opportunity. Okay, so let's look right now at some crypto. This is Bitcoin. Bitcoin looks very good right here. It has completed a wave 1 and ABC correction, puts in a wave 2 low. If we take the length of wave 1 and we place it at the wave 2 low, Bitcoin is going to 69,166. This move was less than 2 weeks. So I think in the next 2 or 3 weeks, we're going to see Bitcoin go all the way up to 69,000. Now, astute wave theorists will say, what about wave 4? What about wave 5? We'll get to those waves when we get there. But the bottom line is that Bitcoin appears to be incomplete until it reaches 69,000. Now, you don't want to get too carried away with your correlations, but if Bitcoin's exploding, you probably don't want to be shorting the stock market. Okay, so this is wave 1. This is ABC, wave 2. Bitcoin, if this low right here of 50,000 holds, Bitcoin is about to take off. And it's going to reach 69,000. It's going to reach the median of this pitchfork. Let's clear this up a little bit because I really like this pitchfork too. We can almost trade this without a wave count. If we take this low, connect it with this high and this low, Bitcoin's got a gorgeous pitchfork right here where we have reactions on the median of this pitchfork. Look at these really nice wicks reacting on the lower bound. I would suspect that the very top of this run, where we have not only wave 3 but also wave 5 complete, will be at the median of this pitchfork. I love seeing these reactions on the median of this pitchfork. I love seeing the reactions off the lower bound of this pitchfork. What I'm expecting is that Bitcoin is entering, or is currently in, I should say, a wave 3. We have wave 1. We have an ABC correction to put in a wave 2 low. If 50,000 holds, Bitcoin's heading to 69K. And 69K, that's the conservative target. Okay? It could definitely go higher than that. So, obviously, unless you're on illicit substances, you don't want to be shorting Bitcoin at 69K, just like you don't want to be shorting the stock market when emerging markets, EEM, reaches 60. Okay? Those are just conservative targets that wave theorists will hold out for, because if we take the length of wave 1 and we place it at the wave 2 low, that's actually a conservative wave 3 target, because a lot of times wave 3 is actually bigger than wave 1. It's actually supposed to be bigger than wave 1. We look at Bitcoin right now, wave 3 only being the length of wave 1 would take Bitcoin to 69,000. So let's look at Ethereum real quick. Another name of this cryptosphere. It's the exact same wave count, so I'll go a little quicker with this one. But it's the same thing. A wave 1 from this low, an ABC correction puts in a wave 2 low. So what we should see right now is that Ethereum and Bitcoin are going to run off together. And we today started to see some participation from Marathon Patent Group and Ebon. Some of these Bitcoin mining stocks like Canaan Creative, letting us know that this is a broad rally that's going on right now. So Ethereum, if we take the length of wave 1, we place it at the wave 2 low. The next stop for Ethereum, once this lows, is going to be around 22,000. We'll see when this lows how accurate that was. But Ethereum's going to 22,000. Bitcoin is going to 69,000. If we take the length of wave 1, place it at the ABC wave 2 low correction, Ethereum is on its way to 2,193. So 2,193, that's the conservative wave 3 target for Ethereum. That could be hit in the next 2 to 3 weeks because this move for Ethereum was less than 2 weeks. And remember, in wave theory, wave 3 is longer and stronger than wave 1. So I think in the next 3 weeks, we're going to see Ethereum run up to 2193. We're going to see Bitcoin run up to 69K. And remember, both of those are conservative targets. So let's kind of put this all together. What are we saying? We're saying healthcare looks like it is incomplete until it reaches 124. We're saying XLY, consumer discretionary stocks, look like they are heading to 183 minimum. We're saying Bitcoin's going to 69K. We're saying Ethereum is going to 2193. We're expecting a run up in the stock market right now. Okay, we're expecting a run up in the stock market right now. And where that's probably all going to coincide is when emerging markets hits this box. When EEM is at 60, there's probably going to be some euphoria. There's probably going to be, a lot of retail traders making money. A lot of bears are going to be blown out. And that's when it's going to be time to get a cash position ready to buy this wave 2 correction. And this wave 2 correction, I don't think I'm underestimating. It's going to be the biggest buying opportunity potentially ever. And here's why. If we look at American Airlines and if we look at Chevron, we see that these major sectors, we look at JetBlue too. If we look at American Airlines, we look at Chevron, we look at JetBlue, we look at these long-term charts, Chevron is completing a wave 1 and a wave 2 correction. It's completing another wave 1 and another ABC wave 2 correction. So this low that we put in last year around May was a generational wave 2 low for the airlines. So conservatively, we're expecting that the airlines, American Airlines, is going to 65 minimum. And that's a conservative target, right? So in the longer term cycles, any investment horizon, in my unprofessional or unlicensed opinion, that is longer than a couple of months, you might be risking a lot trying to game it when EEM reaches 60. I think it's really worth it to have a cash position ready when EEM hits 60 because there's going to be some generational wealth building opportunities at this correction. So what are we looking for? We're looking for Bitcoin to go to 69K. We're looking for Ethereum to go to 2193. We're looking for XLV to go to 124. We're looking for XLY to go to 183. We're expecting that American Airlines has completed a massive 1-2-1-2 Elliott wave next. We're expecting that JetBlue has done the exact same thing, completed a 1-2-1 ABC wave 2 Elliott wave next. We're expecting that Chevron has completed a massive wave 2 low as well, right? So in the longer term, you can do whatever you want. I'm extremely bullish to the stock market. And if you just look at the S&P 500, you can draw all the wedges you want. But if you look at Chevron and you look at JetBlue and you look at American Airlines, these oil and airlines, they're going to explode in the long term. This is wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1. A, B, C correction, Chevron puts in a large degree wave 2. JetBlue, wave 1. ABC correction. JetBlue puts in a large degree wave 2. The conservative target for JetBlue is 31, and that's very conservative. American Airlines, the conservative target is that it will go the length of this entire run, places this ABC correction wave 2 low. American Airlines is about to triple on the long-term cycles, right? So we're not going to be bearish the stock market if we expect that American Airlines is going to triple, but we are going to be looking to buy dips. Okay, I think one of the best indicators we have right now is that we take the length of this move for EEM and we place it at this wave 2 low. We take the length of this move for EEM and we place it at this wave 2 low. We have a really nice box that is being formed by these equal X targets between 59 to 62. On the one hand, I think bulls are really safe as long as 60 hasn't been reached. And on the other hand, I think there's a lot of merit in getting a cash position ready to buy this dip once we do reach 60. Let's talk about some opportunities in the stock market. I think the biggest opportunity right now, to kind of game this run up is in Boeing. So Boeing has validated a lot of our wave counts. This is wave one. This is wave two. This is wave one. This is wave two. Boeing has broken above this wave one high and this wave one high. So Boeing is confirmed to be in an Elliott wave next. So what we do, if we take the length of wave one and we place it at this wave two low, then Boeing is to be considered incomplete until it reaches 294. Additionally, we have a 161.8% extension target, which we will have for wave three. That takes Boeing to 307. If we take this low, connected with this high and this low, we have another wave three target that we are expecting to be reached, which is the meeting of this pitchfork. So when you're an Elliott wave theorist, if you have a confirmed wave one and wave two correction, you connect the bottom of wave one, connect it with the high of wave one and the low of wave two. The length of wave one places the wave two low is the minimum wave three target. So I think Boeing's about to have a run up, in the next 4, 5, 6 weeks. Obviously I wouldn't buy, or I'm not buying an option that expires in 6 weeks. I buy tons of time on my options, but I'll let you guys know, I genuinely expect in the next 4 to 6 weeks, Boeing's going to be heading to 300. It's going to be at 300. It's going to be the length of this move, and this move right here was from 1030 to 1208. So if you think in the next 4 to 5 weeks, Boeing being at 300 is aggressive, it's really just the length of this move placed at this wave too low. So I'm expecting Boeing is going to the median of this pitchfork. The conservative target is 294 because that is the length of wave one placed at the wave too low. The textbook wave three target would be 307, and then astute wave theorists are going to say, wait a minute, that's just wave three. Yeah, that can definitely happen. We'll talk about wave four for Boeing when we get there. For now, I think that there's an opportunity. We'll talk about a swing trade right now. If 231 holds as the low, Boeing is going to 294. It's going to 307. It's going to go a little past that to reach the median of this pitchfork, and then we might even be talking about a wave four and a wave five higher in the future as well. But so that's Boeing. I really like that opportunity. Microsoft. I like Microsoft here a lot. So this is wave one. 1, 2, 3, 4, 5. Wave one, A, B, C correction. Wave two, and then Microsoft is appearing to nest right here in kind of a shorter term cycle where we have a wave one and a wave two low. So let's say that if 224 holds as the low, there's a pretty nice opportunity to ride this wave three higher in Microsoft. If we take the length of wave one, we place it at the wave two low, then 224 is our invalidation. Microsoft is going to 258. This move takes less than 6 weeks. I expect in the next 5 to 6 weeks, we are going to see Microsoft at 258. That lines up with Boeing in the next 5 to 6 weeks, reaching around 294, 307. That lines up with XLV in the next 2 months, reaching 124 conservatively. That lines up with a run-up that we're expecting in XLY to 183. That lines up with Bitcoin and Ethereum having a large thrust higher. So I think what we can start to expect is we're about to see a euphoric moment in the stock market. We're about to see a blow off top. And when, in my unprofessional opinion, is the best time to look around and say, okay, I'm going to start getting some cash ready. I'm not personally going to be selling any long-term shareholdings. I'm not even going to be selling any lead call positions. But I will be looking to see when EEM reaches 59, when EEM is in this 59 to 62 box, that's going to be a moment for me to get some cash ready to buy this wave 2 correction. I wouldn't be surprised if we go on FinTwit and see some euphoria around this time. You know, some Bitcoin euphoria, some Ethereum euphoria, some Boeing euphoria. And if we look at Microsoft, we could see some big tech euphoria as well. But remember, EEM, this wave 2 low, this is a buying opportunity. It's not a shorting opportunity. And long-term investing, for myself personally, if I look at American Airlines, this is a massive nest. If I look at JetBlue, this is a massive nest. If I look at Chevron, this is a massive wave too low. And all these stocks are going to be in huge bull markets. So long-term picture, we're in the very early stage of a bull market. Short-term picture, if EM hits 60, we might be looking for that euphoria, this blow-off top scenario to buy this wave 2 correction. So what are some other opportunities? We talked about crypto a lot. EBON, in my opinion, is acting as another, it's up 9%. So I usually don't like to buy stocks when they're already up a lot. But EBON right now is acting as yet another indicator that the crypto market is about to have a big thrust higher. So if we look at EBON, this is clearly a wave 1. This is an ABC wave 2 correction. Then EBON, there's a few ways to count this. Let's start with, they're basically the exact same idea. EBON has a wave 1, an ABC correction puts in a wave 2 low. And then the one way to count this is to say this is wave 1, this is wave 2, this is wave 1, this is wave 2, this is wave 1, this is wave 2. This is a huge nest. And if you take the length of wave 1, you place it at the wave 2 low, EBON is conservatively going to 14. Another way to count it would say, oh, that's just a bunch of 1, 2s. You could say this is a wave 3. This is a wave 4. And now EBON is within wave 5. So this is wave 1 of wave 5. This is wave 2 of wave 5. And then wave 3 of wave 5 would take EBON conservatively above 13.70. The whole point is that there is no way to count EBON right now, in my opinion, where this high of 13.70 isn't broken. We're talking about another crypto miner that is about to double. We saw Marathon Patent Group go up 14%. This is starting to become a broad rally in the crypto market. I think EBON conservatively is going to go to the median of this pitchfork. So I really like EBON. I like NXTD more personally. NXTD. Next ID is another crypto miner. This one hasn't moved as much as EBON. And I think if we look, NXTD appears to be completing a wave 2 correction from this high. So this is how I would count NXTD, where this is a large degree wave 1. This is a crypto miner. This also is sort of like an identity stock. The fundamentals on this one are pretty interesting. But this is a crypto miner. This has a lot of Bitcoin exposure. And I like, probably NXTD. This is a high risk, high beta stock right here. But if we see 1.05 hold as the low, I'm conservatively expecting that NXTD is completing a wave 2 correction from this large degree wave 1 high. The large degree wave 1 looks something like this. This was a wave 1. This was a wave 2. This was a wave 3. This was an ABC correction to put in a wave 4 low. And now it also completed a wave 5 to complete this larger degree wave 1. We put in a wave 4 low after this ABC correction, and we have our 5th wave higher that completes the larger degree wave 1. So from there, we have an ABC correction for NXTD. It's actually going to be a really, you can see that A, B, C correction to put in a wave 2 low for NXTD. And this could be a potentially very explosive play right here. If 1.05 holds as this wave 2 low, this is a wave 1. This is an ABC correction putting in a wave 2 low. NXTD is going to 4.18. Now, I think it's actually pretty interesting. I assumed that NXTD would have really high options prices right now, but it actually doesn't. The IV rank, so in the past 1 year, the implied volatility range is in the bottom 5%. Excuse me, the IV percentile is in the bottom 1% of its past 52-week range. So I thought that was pretty interesting. This is a pretty wide implied volatility range right here. But NXTD, the implied volatility is actually pretty low. I like it as a shareholding too. It's such a cheap stock. But this is just for me personally. I like NXTD probably more as a shareholding than a Leap options play, but I think Leap options would do pretty well. It looks like we're doing a wave 1, a wave 2, and NXTD. A lot of people aren't familiar with this name, but they're about to be. This is a 1, 2, 3, 4, 5 large degree wave 1, an ABC correction, large degree wave 2. 1.05 holds as the low. Next equal legs target is 4.18. I really think 4.18 is going to be hitting the next, 4, 5, 6 months. Honestly, I think it's going to happen a lot quicker than that. But anyway, NXTD, EBON, just helping to confirm what we're seeing in the Bitcoin chart, what we're seeing in the Ethereum chart, that these sectors are about to take another leg higher. So that's how I'm expecting the market is going to play out in the next 4, 5, 6 weeks. I think that a lot of people fell asleep during March. I think April, we're going to wake up. But while everyone's getting crazy in April, while everyone's getting euphoric in April, if XLY hits 183, XLV hits 124, and the emerging markets hit 60, EEM hits 60, might be time to get some cash ready to buy this wave 2 correction.